governor noted that the increase was needed to complement efforts by government to fast-track the process in stabilizing the economy.
The MPC believes that these measures will help restore fiscal and debt sustainability and bring down inflation, as well as help stabilize the currency. In the interim, the MPC sees the need to remain vigilant and moderate liquidity in the system to underpin the macroeconomic adjustments taking place to drive inflation on a downward path.
Dr. Ernest Addison also ruled out suggestions that Bank of Ghana should look at a fixed exchange rate regime because of the recent challenges with the Ghana cedi in the last quarter of 2022.
Flexible foreign exchange system has worked very well for Ghana since 1986 when we liberalized the market. Now that framework assumes that your macroeconomic fundamentals will be strong. And there have been years that that framework has delivered exchange rate stability. Even in 2021, the cedi was stable. The year before that, 2019, 2018, you were able to keep the cedi relatively stable, maximum 5%, 6% depreciation for the whole year. So yes, if something goes wrong with the underlying economy and you see a much higher depreciation, you don't go back and say, oh, the framework is the problem. The problem is not the framework.
On support for banks that will be hit by the debt exchange program, this is what the governor had to say.
On the basis of that exercise, the bank came out with regulatory reliefs, which we thought would help them deal with the impact on liquidity and capital. We agreed to reduce the cash reserve ratio from 14% to 12% on domestic currency deposits, reduce the cash reserve ratio from 13 to 12% on foreign currency deposits. These measures gives liquidity back to the banks. It addresses the issue of the impact of liquidity. We also dealt with the issue of capital by reducing the capital conservation buffer by 3%. So the capital adequacy ratio was reduced from 13 to 10%. And even some of the technicalities surrounding the debt exchange in terms of derecognition losses and all of that, we agreed to have them restore its impact on capital over a 4-year period. So there are a lot of things that the Bank of Ghana has agreed to do to help the banks deal with the impact of the domestic debt exchange on capital and liquidity.
Dr. Addison has also been giving details on Ghana getting the IMF financial support by the end of the first quarter of this year.
Gone very far. You're aware that we've gone very far with the staff level agreement. We hopefully should be seeing the end of the domestic debt exchange. We are also making progress on the external side, on the external debt restructuring. The necessary committees have all been formed. And we are confident that by the end of the first quarter, we should be able to get a disbursement from the IMF to help augment the foreign exchange resources of the central bank. So I don't foresee a situation where, we would be in that kind of trouble.
The governor of the Bank of Ghana, Dr. Ernest Addison, was optimistic that the debt exchange program will rather help stabilize the economy and deal with the current pressures on the local currency.